So a lot of new and beginning traders when starting out tend to use an app called MetaTrader 4. However, this app has been banned from the App Store and many other app stores across the globe. This is because the people who invented MetaTrader 4 are called MetaQuotes and they are a Russian-owned company, and as part of their ongoing punishments, MetaTrader was the next app to be annexed from the shop. However, in this video, I'm going to be giving you solutions to this problem as well as a strategy to go along with it. And did I mention all of this is going to be for free? So without further ado, let's jump into the video. Now, before we begin, if you guys are new to the channel, I would much appreciate it if you could subscribe. And to keep these free videos coming, make sure you're liking the video and make sure you're commenting because it does help the channel out massively. Also, there is a big announcement coming at the end of this video, so make sure you stick around. So just quickly, this is how I know how you can trade off of TradingView and connect your brokerage account to your TradingView account. All you're going to want to do is click on any sort of currency pair that you may have, launch full featured chart view, and then what you're going to want to do is you're going to want to hold down on the chart, and then this sort of little line will appear, and then you want to hit the plus right under where it says sell 1 GBP USD at 1.18 blah blah blah. It says create new order. You press create new order and then it brings up this section, and that is how you connect your brokerage account to your TradingView account. So now on to the juicy information that you guys all want to see, and that is actually the strategy working on the live markets, trading from our mobile phones. Now, first of all, we're going to want to move our mobile phones to a horizontal position or a landscape position, as many of you will know it. This is just because it spreads the chart out a little bit more. It's a little bit easier to see and it doesn't make everything seem quite as jarring. This just spreads it out. It makes it a bit easier to read and more readable. And trust me, that is the most important thing of this video. The strategy is just important, but understanding and being able to make it easy to read is once again just as important. The next thing that you're going to not want to do is add too many indicators, because if you add too many indicators, your screen becomes cluttered. Now, you're already trading on a very small screen, so why would you make that screen even smaller by throwing on 100,000 different indicators, minimizing your view even more? So what we're going to be doing is using one indicator to help us with our trades, and this is just a gauge for bias, and we're going to be using nothing else. Naked forex trading, using support and resistance, using Fibonacci, all of that we're going to be using within this strategy. However, we're not going to be using things like the RSI or any other indicators like Bollinger Bands or anything like that. So what I've got just to gauge is something called a 50 period moving average. And all this does is takes the last 50 candles and then puts it as a rough average of the price. As you can see, this is what we can see. This blue line here, that is the moving average. Now, the general consensus with the moving average is if it's above price, like it is over here, like it is in there, what we're going to want to do is we're going to be looking to sell the market because it's below the moving average. We're going to be wanting to sell. Now, if it's above, like it is here, so if price action is above the moving average, we're going to want to buy the markets. And that is a great way of just having a bias of what you want to do. So if the moving average is above the candlesticks, we're going to be looking to sell. If the moving average is below the candlesticks, we're going to be looking to buy. Now, I just want to point out that it's not as straightforward as it may seem, unfortunately. Nothing rarely ever is, because we're not just going to see that the candlesticks and price action is above the moving average and we're just going to buy, because we're not going to want to buy where price is at right now. So if we drop down to a different time frame, for example, the daily, we're not going to want to put on a buy here with a stop loss down here and a take profit, say, all the way up here. That just seems quite unrealistic, if I'm brutally honest, because we're actually trading at a resistance level right now. So putting a buy on at the moment is not going to be a good thing to do. So what we're going to want to do and this is the most important thing when you're beginning your trading journey, is to be patient and wait for the trade to come to you. So what we're going to do is we're going to draw some support and resistance zones. Now, what a lot of you would have been taught is that when you're at resistance, you want to sell. When you're at support, you want to buy. For the most part, that is true. However, when you're in a trending market, if you're on an uptrend and you're selling at resistance, all you're going to get is a pullback. You'll go into a little bit of profit, and then it will just rocket up, take you out, and carry on going. And then you'll be kicking yourself because then you realize you're in an uptrend and you're putting a buy or a sell in an uptrending market. It's like trying to catch a falling knife, isn't it? It's never going to work. You may briefly grab a touch of it. You're never going to stop it, though. So what we're going to do is we're just going to draw on some support and resistance zones. And all I'm going to use is the rectangle. As you can see, we're on the daily time frame, and we're going to be doing a sort of top-down analysis. We got this nice zone here, right? And this is why I'm saying we don't want to just willy-nilly put on a buy. Our bias is a buy. However, we don't want just to put on a buy for the sake of putting on a trade. Because if we used to buy here, yes, it may put up, it may push into profits and somehow work out quite miraculously for us. But if you're thinking what other traders are doing right now, what are other traders thinking, right? Other traders are seeing this resistance zone, and what are they doing? They're selling. They're selling at resistance. So what are we going to be doing? We're going to be buying. However, we're going to be buying when we get a break. So what are we going to be looking to do in this situation? So what we ideally want to see is something along the lines of this. We're going to want to see a brief pullback, and then we're going to want to see a break, a pullback again, and we're going to want to buy into this area for the continuation play further upwards. That would be the play on euro versus the British pound. We want to see a break of resistance turned into support, and that's where we're going to want to buy. Because once again, why are we buying? The moving average is below price, and we're looking to buy. Our bias is to buy. We're just waiting for that golden ticket. If we go on to lower time frames, there may be a slight support zone that we can see on the lower time frames. However, at the moment, I wouldn't be looking to buy. If we was going to buy, I would probably wait to get to down here somewhere, because we have got a pretty good support zone back here. We get our triangle out, place it on like that, like so. If price was to come back down here, then that would be a good place to buy, because what we could do is we could also whack on a Fibonacci retracement tool, which is right here. We could put it on the swing lows, move it to the swing highs, and then maybe we could see something like this. We could see a play where it comes down to maybe the 61.8, maybe the 78.6, and we look for a buy just like that. And now it's time for the announcement, and trust me, if you are a beginner, this is going to help you massively. If you're watching this video, you're just starting out your trading journey, this is going to help you out massively. I've got at the moment a deal going on with the premium signals where you can get access to it for an entire month for just £19.99. This was at once £45. You are saving over 50% on this deal. And now you might be asking, if you're a beginner, why is this going to benefit me? Because all it is signals. When I send the signals, I send the analysis, I send fundamental analysis, I send technical analysis, I make you understand why we have taken the trade. So not only do you get the trade and be able to make money alongside myself, you can also learn with me and understand the strategy that I use. If you are new, I cannot stress this enough, you will benefit greatly from this offer. Get in contact with me via email. Once you got in contact via email, we'll get you plugged in and put into the Signals group where you can start earning money and learning for £19.99. This deal is not on forever and will be ending very, very soon. So get in contact, get in touch, and secure your spot whilst you can.